By doing these few things, it will easily save you more than thousands of dollars in your tax savings. Hi everyone, this is Pete here. So as we come to the end of 2024, there's always a lot of things that needs to wrap up for the end of the year. And for me, one important thing that I will want to do is to make sure that in addition to making a lot of profits as an investor, I also want to reduce my tax as much as possible at the end of the year. Alright, so in this video, I want to share with you guys what are the must-do that I personally do to reduce my taxes, and I want to help you guys to save money as well. Alright, so let's get straight into it. Now, number one thing that I would always do is to make sure that my supplementary retirement scheme, or in Singapore we call it SRS, is fully topped up. Okay, so for those of you who are not aware, there is a scheme called the SRS in Singapore whereby you can top up to $15,300 as of this year, okay, to reduce your tax obligation. Now, this is a form of retirement planning, right? So once you top up this amount of money, it will be removed from your taxes and you can use it for other form of investment. So you can see over here that example that was given is that you can, if you make a contribution of $12,000, all right, this $12,000 of tax relief will be removed from next year's assessment of your income tax. So do take note, this must be done by the 31st of this year, which is actually a few days from now only. So how do you open an SRS account? Very simple. In Singapore, there are only 3 banks that can do it, which is namely DBS, OCBC, and UOB as well. The maximum that you can contribute for Singaporeans and permanent residents is $15,300 this year. And for foreigners, you can also contribute to your SRS account up to $35,700. You might be wondering how much tax saving can it really save, right? So this is an example right here. Talking about if you earn about $96,000 in your annual income, right? If you do not do any SRS tax relief, your tax payment will be about $2,370. But if you contribute to the maximum, which is $15,300, then your payable tax actually drops to $1,299. So that's a tax saving of over $1,000, right? And this $1,000, you can use it for other purposes like your investment and even other payments. The next question that I always get on SRS is that, Pete, can I withdraw? When do I actually withdraw? Now, you will only withdraw this at your statutory age of retirement when you open the account. So right now, as of this recording, the statutory age is 63, right? So actually, it makes a lot of sense for you to open the SRS account as soon as you or even your child turns 18 years old, because that will lock in the withdrawal age, right, at the moment. Because if you wait a while more, if the statutory retirement age increases to 65 or even 67, then you will have a later withdrawal age. Now, is there totally no tax when you withdraw? Now, this is where it gets a bit hard to understand sometimes, right? So over here, this is the table from the IRAS website. I really encourage all of you to go to the website and have a good read, okay? But let me just bring you through very quickly. Basically, if you withdraw on or after the retirement age, okay, you can spread out your retirement over 10 years. And out of that amount that you withdraw, only 50% of it will be subjected to tax, okay? Now, there are other conditions for withdrawal. Generally, it's due to medical reasons or terminal illnesses, right? So I'm not going to go through that. But one thing to take note is that, can you withdraw your SRS before your retirement age? And the answer is actually yes. Okay, you are allowed to, but do take note is that in that event, the withdrawal sum, 100% of it will be taxable, and there is also a 5% penalty, right, for early withdrawal. So do take note, right? You can take it out, but there's going to be some penalty over there. So do think very carefully, right, before you withdraw it. So Pete, does it mean that we still have to pay 50% of the tax, right? The thing is this. Think about it. You can withdraw it over 10 years, right? So there is actually kind of a calculation to help you to pay no tax at all, right? So how do we do that eventually when you need to withdraw, right? Is that, take note, currently the tax rate in Singapore for income tax, the first 20K is actually non-taxable, right? So what that means is that if you spread it out over 10 years and each year maybe you withdraw about $40,000, right? That means actually that $40,000 has no tax at all. Okay, so right now, based on the current tax structure, first 400,000, if you spread it out over 10 years, actually there is no tax, right? So technically there's no tax unless your SRS is really big, then you have to pay a little bit of tax there. Okay, just a quick one for foreigners, because I know there's quite a few of you in my community, right? Now, if you contribute to the SRS and should you leave Singapore before your retirement age, you can also withdraw your SRS, okay? However, you will still be having that 5% penalty. But there is a concession over here. So if you look over here, if you already have your SRS account for at least 10 years, okay, then actually you will be waived off the 5% penalty for a one-time lump sum withdrawal. Okay, so think about it. Once again, it is also a benefit for you to open your account as soon as possible to start accumulating that 10 years in maintaining the account. Therefore, for SRS, do take note, to qualify for the tax relief, you must contribute before 31st December. And right now, when I look around in the market, there doesn't seem to have a lot of SRS account promotion, except for the UOB one that I can find where you can get some shopping voucher over here. Now, the next thing is, after you have funded your SRS, do not leave it idle in the account, right? You can use it to do many things, like for example, you can do Singapore shares, you can buy bonds, you can buy T-bills. I hear a lot of people say that you cannot use SRS to buy US equities, which is what primarily we invest in, right? Now, that is actually partially not true. Yes, if you just go to the banks and ask them whether you can use your SRS to buy US equities, it is not possible. But actually, it is possible through other brokerages. For example, I'm with Phillip Capital, and Phillip Capital actually has this system called a managed accounts, right? I'm one of the portfolio manager there, right? So through that, I can actually use SRS to invest in US equities, okay? So just a very small plug for my investment services. For those of you who are interested in using your SRS to invest in US equities and to be managed by me, you can go to this website over here, investwithpete.co, and find out more about it. So the next tax relief that you can do is actually a CPF top-up for yourself and your loved ones, okay? Now, there are quite a bit of conditions over here. Let me just go through it. Number one is that you can enjoy up to $8,000 for yourself if you're topping up to your own account, and another $8,000 to your loved ones. Now, what is the definition of loved ones, okay? So over here, the loved one includes parents, parents-in-law, grandparents, grandparents-in-law, spouse, and siblings. So in total, for your CPF tax relief, you can actually get up to $16,000 of tax relief. Now, do take note that when you top up to yourself or to the elderlies, right, there is actually no other condition required already, so long they have not reached the top-up limit for their special account or retirement account. However, if you are topping up to your spouse and your siblings, do take note there is a condition that they must not earn more than $4,000, right, in the previous income year. Now, you might be wondering, $4,000, that is so little, right? The good news is that next year in 2025, this is going to be increased to $8,000. So you're able to top up for your loved ones even if they earn a little bit more than $4,000. Also, before you top up, please do check whether you have reached the full retirement sum, okay? So if you're below 55, right now the full retirement sum is $205,800, okay? Now, this will include everything such as your special account savings, your investment amount, right? So you need to include all those to check how much more you can top up. Now, you can use the IRAS website or the CPF website to find out what is the limit that you can top up to. And this will also apply to the people that you're topping up to, okay? Now, for those of you who are above 55, let's say you're topping up for your parent or your grandparents, the good news is that it is not the full retirement sum, but the enhanced retirement sum, which is a bit more, right? So right now, the retirement sum for enhanced is at $308,700, okay? So now this amount will change every year. So each year when you're going to top up, just go to the CPF website and key in your NRIC number and check it before you top it up. Next thing is the match retirement savings scheme. Now, this is something that will already be automatically applied when you do your CPF top up. And this basically is the government matching the amount of money that you top up to your loved ones. As of this year, you will get a dollar-to-dollar matching grant up to $600. But the good news is that going into 2025, this amount will increase up to $2,000 per year. However, the $2,000 will not be attracting the tax relief over here. So if you top up to $8,000 to your dad, for example, and he received a matching grant of $2,000, then your tax relief will not be $8,000 but just $6,000. Alright, take note, there are also some conditions over here regarding your age, your monthly income, and even the property that you own. So do take note of all this. Now, if you are eligible, I think this will be applied to you automatically. There's nothing you need to do. Next up is the CPF MediSave top-up. This is where you can top up your MediSave to the basic health sum, which is the limit, right? And the amount that you top up will be eligible for tax relief. There is actually a limit on how much you can top up to your CPF, and right now, the limit is based on which year you turn 65. So for example, if you're going to turn 65 next year in 2025, your basic health sum will be $75,500, and this will be fixed for life after you have turned to that age. Now, as you top up your CPF and your MediSave, take note, everything will be maxed out at a tax relief of $16,000. So before you top up, right, do check which one is more suitable for you. Personally, I like to top up my MediSave first because that is a money that I will almost immediately use every year to pay for my insurance, right? So it is almost a no-brainer because I'm going to either pay out of my pocket or I will transfer into CPF, MediSave, then using that to pay for insurance and through that getting tax relief. And also, there are a lot of other tax relief that is relevant, but over here, I'm just talking about those tax relief that you can optimize. Now, in total, remember your tax relief caps out at $80,000. So for those of you, especially those of you who are working parents, working mom, there's a very good chance that you might be nearing or even going beyond the 80K tax relief. So do check on that before you do your tax relief contribution, because if it goes above $80,000, the max you will get is just 80K. Now, the next part I want to talk about other than relief is actually tax deduction. Now, this one doesn't have any limits and actually is different from your relief. I'm going to talk about some of the key ones that I always look at, and you can actually go to the IRAS website to find out more about the other deductions. Number one, as a landlord myself, I want to talk about the rental deductions over here. Now, a lot of people actually don't know that you can actually have deductions on your rental income. So if you're a landlord, the most straightforward thing you can do is to go for what we call the simplified tax filing, where it will just automatically deduct 15% of your rental income as expenses as you file it. Okay. Now, over here, on top of the 15% deemed rental expenses, you can still claim for mortgage interest that is taken on the loan for the property. Alright, so for all the landlords, do take note, keep all your receipts, all your expenses in case there's going to be an audit. Now, if you don't want to use the 15%, what you can do is actually go for the actual tax deduction over here based on the actual expenses. Alright, so do check which one is more suitable for you. Generally, I find that the 15% is pretty close to all my expenses, plus I can still insert the interest of the mortgage loan that I take on. For those of you who are going for the actual expense, these are the allowable and non-allowable expenses as an example, right? Once again, for the full detail, refer to the website over here. But one thing that has changed since 2022 is that last time, the cost of securing a tenant only starts from the second tenant onwards. But since 2022, actually has been changed to the first tenant. So you can actually consider things like your agent commission, advertising fee, legal fee, stamp duty, right, in getting your first tenant, and that will be considered as allowable expenses. Alright, next one for all of you who are employed, right, there are also employment deductions, alright. Now, this is quite a big amount during the COVID period as well, right? So what are the allowable expenses that you can claim? Now, generally, these are expenses that is incurred during your official duty. Most importantly, it must not be reimbursed by your employer, and it is not capital or private use in nature. Now, an example of all these expenses include like entertainment, right, or subscription to professional bodies. So I actually know a lot of doctors and lawyers who are subscribers, right, they're paid to all this and they actually don't claim it, right? These are actually deductibles from your income. So you're leaving a lot of taxes on the table as well. And also includes any travel expenses, right, on public transport. For example, bus, train, and taxi, or even Grab, right, that is not paid for. Now, for those of you who are working from home, you can also have other expenses deducted, right? For example, your electricity, your telecom charges, Wi-Fi charges, okay? So all these, there's a bit of calculation needed, so do refer to the website and keep good tracking records. Alright, finally, we come to charities. Now, do you know that if you donate to an approved charity in Singapore, this is also deductibles, right? So right now, for every dollar that you donate to any charity that's approved in Singapore, right, IPC approved, you can actually get 2.5 times of the deduction, okay? Now, look at the example over here that's given. If your income is 100K that year and you donated $10,000 to the approved charity, right, your deductibles actually is 25,000, 2.5 times. So therefore, your accessible income is no longer 100K, but just 75K. Now, this is where it can significantly reduce your tax amount at the same time, right, for you to do something good to donate to the charity as well. Alright, so these are all the tax relief and tax deduction that I will look at and work on every single year. So if you have not looked at your tax obligation, check out what are the relief and deduction, alright? This will be a good starting point, but most importantly, do refer to the official website to find out more about other tax relief and other deductions that can be applied to you. Alright, I hope you all learned a lot from this. Once again, for those of you who love to use your SRS to invest in US equities, you can get in touch with me. Otherwise, I want to wish every one of you once again a Merry Christmas and a great 2025. I will see you next year. Bye bye.